Hi everybody, it's CryptoBirb Adrian speaking. Welcome to today's Friday webinar. Today we are going to briefly discuss through the market summary of what's been happening over the course of the past days, past weeks in traditional markets, in Bitcoin and in cryptocurrencies. We are going to compare and sing in for the deeper details and market insights for DeFi, for altcoins, to answer some of the most fundamental and most important questions basically that you probably want to know ahead of the beautiful family time of Easter. Well, guys, if you are ready to go ahead and hear some good details, make sure you stay tuned. We are going there right in a second. Awesome. Let me know, everybody, how you guys are doing today. I'm feeling really good, recovering super fast. Stitches are off. I'm feeling great. The weather could be better in Poland, but it's actually the Good Friday. It's this time of a year that we Christians, celebrate Jesus Christ's resurrection. And that being said, I, of course, wish to each and everybody celebrating that and and beyond, happy Easter, and then very, very, very much of the family time ahead. Hope you guys will have an amazing experience out there. And actually, let me dive in straight to the merit because this is supposed to be a short webinar as of today. Okay, so we are talking about inflation rate that basically hit the rates of the numbers of 8.5% per March for the US. Okay, this is from the Trading Economics, but of course also published by the Federal rate. So so we are really discussing about very high accelerating inflation, which does not seem really to be kind of like linear, I should argue. It rather seems to be accelerating more and more, right? Which is typical to geometric advance or exponential, advance, no matter how you refer to it. It's accelerating faster than linear. This is what matters the most. And I do believe that it is also aligned with something that I had previously discussed in terms of the inverted yield curve, right? The interest rate spread between 10-year maturity T notes and the 2-year bills, basically have for the treasury significant, I should say, implications, because the last time it actually happened, we briefly brought sooner than later recession, right? And historically, over the course of the past hits, past seven times, actually inverted yield curve, which is this very chart that we're representing here, has brought successfully prediction of upcoming recession. So it makes sense to anticipate, even if it's just for a brief moment, that if the short-term rates, if the short-term treasuries are actually returning higher yield than the longer-term yields. This is a classical example of inverted yield curve, and this is quite often and more often than not, investor sentiment, revealing the investor sentiment that the bigger, longer time frames are actually less safe, right? So this is something to take out of that and definitely take away. I also want to, of course, comment on this news from Elon Musk, actually, offering to purchase Twitter fully, to buy them out for 100% of the shares. This is quite an, I should say, unprecedented move. And of course, there's so much going on in terms of the market volatility. And heading straight into the merits of the market summary, I think we all need to wrap. By the way, let me know if you can see the screen, guys. Well, I do really hope it's all playing out well. We are, of course, closed for today's markets. There's not much change because of the overall sideways movement that's been going on, right? We're talking about some potential head and shoulders set up the way I referred to it on the last show a week ago. And we are basically closed for now at around 34,500s, right? This is right below this 200-day moving average, which is basically the mean Q resistance, which is flattened out completely, right? So flat performance on industrials for the average, for its mean, basically tells you that there are chances that the market is going to perform rather average and oscillate a little bit above, a little bit below, around the average. This is potentially what may bring certain expectations. So far supported at the range lows area at 34,200s, with the risks of actually becoming a relevant head and shoulders pattern potentially dragging the price, the readings down to 33,500 if this is an actual case with a rejected return pullback. All right, this might be actually happening if there's some additional risks to the market for how it looks. If we have a look quickly through, I'd argue the most important defensive stocks. Well, there's been definitely consumer staples, the basic necessity goods, were trading very high ever since March, right? This is definitely a very strong increase and very sharp increase with a lot of momentum. This is definitely the money that moves the market. And this momentum tells me that the market is choosing the risk of environment, a little bit of a defensive setup. It can be also told by the way that the healthcare looks like very strong and sharp increase on the healthcare as well as the basic materials. Ever since March, you see there's a lot of correlation now at 90 points of the scale here, resisting in this local consolidation movement. And of course, utilities, XLU for the ETF sector here, very, very sharp increase. All of that tells you that the market is basically playing this a little bit more, I would argue, defensive than risk on, right? Here we're looking at, of course, composites index and the large caps on the right side of the chart. And what it tells you is, despite we had this beautiful, marvelous, upside pullback after the Russia invaded the Ukraine, 51 days roughly ago, as far as I'm concerned. Then we had managed to get some nice upwards pullback off the lows of the index on the composite scale of the mid 12,000s all the way up to mid 14,000s. So this is definitely quite a heavy pullback to the upside. There was some bullish, crossover in terms of 20-day average crossing over the 50-day average, which tells you that the short-term trend was actually more pressing to the upside than the medium term. And this potentially, could tell you about some upcoming further trend. Of course, it is a lagging indicator. It doesn't guarantee any future results, returns, but instead it informs you how the market has been performing and potentially if the trend is supposed to sustain. Counting this bullish crossover, this bullish setup, the market potentially can find and search for the support for the base somewhere around here, potentially committing to head and shoulders inverse pattern. And if this is actually such a case, and we do manage to build the base somewhere around these regions of low 13,000s, this potentially brings some chances of inverse head and shoulders, which can pull it back at least to the mean 14,000s, if not higher, right? This could potentially have some longer medium-term implications, I should argue. But overall, the amount of supply, the amount of sell-off pressure that's been coming up over the course of the past couple of days, ever since April started, basically tells me there's lots of gap. See about this, acceleration to the downside tells you that the market is not necessarily the strongest place right now, which aligns definitely with the narrative of the little bit defensive risk of environment seen and presented by the defensive stock and sectors. Here on the large caps, you can tell and argue that large caps are doing somewhat better. You can tell there is quite a different deterioration between, and divergence between the actual market reading for the composites and its fair 20-day average. 50-day average, sorry. And here on the hang on, this is 20-day average on the left side. There's some confusion, I guess, with the coloring, but 20-day average on the left side, and the same color sadly applied by mistake probably to 50-day average, right? So we are talking one way or another about composites being and trading below, heavily below, it's above 20-day and 50-day average. Here's the red one, the 50 days. And the 50-day average in the blue on the right side of the scale of the chart for the large caps, right? So the large caps are right now slightly higher in terms of their relative performance against their mean value, mean performance, than the risk on kind of like barometer risk appetite measure that the composite index is, right? Overall, like I said, it does bring somewhat of a potential to, after a successful mean reversion process, right, breakout and retest with the mean reversion, it brings some chances for an upwards pullback, at least, I would argue towards like high 4,500s. But if this is actually the case, then we can complete this head and shoulder patterns inverse as well on the composites. But this is of course arguable, and there is so much selling pressure and a lot of uncertainty with Russia, Ukraine, with soaring inflation, with accelerating overall issues, and basically the rate hikes on the horizon, right? So all that commits and contributes to the overall, I should say, risk of environment. And on top of that, you have basically very strong commodity market right now at 132.4 on the futures basis for the Bloomberg Commodity Index, which is heavily exposed, I would argue, to energy sector and the precious metals. And this makes sense, that after the bullish market was confirmed basically a year ago, or even earlier the year ago, when the 50-month average was crossed over for the first time in February 2021 by the index, by the futures, I should say here, pricing. It tells you about how strong and accelerating in terms of the momentum the performance has been for commodities, right? Driven by energy prices, driven by precious metals. And all that being said, it definitely searches potentially for support, implies certain support reasoning to be found at around 105 points at a scale for the futures contracts here from Bloomberg Commodity Index. Because of the 50-week average, this is a weekly chart kind of reminder, and technical support resistance, kind of like polarity flip, classical case, right? On top of that, we are also talking about a strong gold market, and after topping out at around the previous all-time highs areas of 2080, 2090 of 2020. There we've seen somewhat of a cap and handle, of maybe not a cap and handle necessarily, but some sort of like a rounded retest, successful retest of the 50-day average, which is the blue curve in here, successful rebound to the upside. So far, it looks somewhat promising. This, you could argue, this sort of like a double bottom pattern, broken and through and followed through to the upside. Arguably can take you with the measured move. Probably in the recent high areas. I would argue potentially new all-time highs, and you can tell there is definitely quite a shift in terms of the recent outperforming against the relative performance against the S&P 500 benchmark, right? So definitely some positive price action, and it does, of course, overall impact altogether how Bitcoin behaves, right? This is a 4-hour chart. My 12-hour chart, which is my favorite, basically tells you that the bears have been in control. The bears have managed to regain the control basically quite a few days ago, right? Ever since breaking below $45,000 support and failing to maintain the support level at the previous kind of like a resistance region. Technically, when you have the setup here, the resistance, right? When you have the resistance and the market keeps rejecting that resistance, and it finally manages to push through and to follow through to the upside, at least on the breakout side, it should maintain and have this rounded retest just like you would have with gold, right? Breakout and this local rounded retest, this is what sustains and confirms the overall validation for the region to be playing the role of a support or resistance. Here, instead, you had no follow through and a failed breakout as a result, right? So, a couple of failed retest attempts to break through. Finally, when it did manage to break through above, instead of having this sort of like a safe rounded retest, of course, we get more tensions and an overall confirmation that the momentum is not ready yet. The bulls are not ready, and the bears have regained the control of the market over the past couple of days. And they remain as such so far, right? And there is a clear invalidation level for the bull side on my favorite chart, which is 12 hours, that you already know. And the stop is at 43,500. So the moment I see a bullish close through this current time frame trailer stop level and validation level for the bearish thesis, bearish advantage, the bulls do manage to regain the upper vote in the market and control, potentially taking it further. Other than that, we are risking some sort of like, even I would argue some sort of like a bearish pennant, or not even a pennant, bearish flag maybe on the major time frame, arguably some bearish, overall bearish looking pattern, right? This is definitely not the case that bulls want to see, right? Corrective wave in the opposite direction. This is not something that we want to see. Also confirmed, if we take Bitcoin against the S&P 500, let me have a look if I actually see, hang on, this is something that I actually displayed as well in the charts on my Twitter. So let me have a look real quick. I'm going to find it. Uh, and I'm talking about this very chart, right? There's been nothing but a very strong correlation between Bitcoin to S&P 500 right now at 0.89, 0.90, basically on the 7-week basis. Very strong correlation, which tells you that Bitcoin tends to move in exactly the same directions in a little bit of different magnitude to what stocks do, right? To what the large caps do. And like I said, we have this risk as long as we trade below the 50-week curve, the 50-week average, and we move inside this kind of like a low momentum upwards movement, still making higher highs and higher lows. However, slow on the momentum side and definitely not supportive of the bullish thesis. So as long as we keep trading below this 50-week average, inside this local, upwards oriented pattern, this may be just a corrective wave to the and followed overall by the potential another kind of like a retracement further down to the range lows area at around $30,000, and this probably could be triggered by some fundamental news and change in the scene to the Russian game. Basically, because if you see some nuclear bombs dropping in or the escalation of the conflict of the war, then I would argue, it's not necessarily the safest environment for traders, and bulls would rather be in danger than bears, right? There could be some flash crashes, dumps, sell-offs, black swans, micro black swans, events, price shocks. Overall, that the chart's not going to tell you. The chart is never going to tell you basically when Putin is going to declare nuclear war, or Putin is going to start dropping nuclear bombs somewhere in the planet, right? The charts, with due respect, are not going to tell you that, like it or not. So there is only so much that we can do with the charts, and it's definitely not going to work as a crystal ball, right? So all that things concerned, we do, I believe, have to take into consideration this overall risks that as long as we keep trading below this medium-term level defined by the Birb Pro, which is the personal trading system of mine, and we keep closing the candles below 33,500, then this brings further chances, and time works against us, basically against the bulls. And finally, have a quick look at a comparison between, I would argue, first of all, from the top, the altcoin charts, right? The total market cap of altcoins, the total market cap of DeFi in the medium level, in the medium region, and the Bitcoin spot price against dollar, right? So here we're having a look at somewhat of a relative performance. You can tell that, there's first of all overall a lot of indecision, right? You can tell the market is lacking follow through. It fails resistances here. It does manage to break above, but then it fails to actually just close above it. Like I said, with a rounded retest, instead we get a failure setup, right? Strong failure, even stronger one, you can tell on the DeFi, right? So you can tell there's also some sort of like a risk appetite, because the moment that Bitcoin had some sort of like, local slight kind of like, just tilt outside the resistance of $46,000, the DeFi market reacted perhaps over optimistically, right? It was over optimistic, and there was sudden influx of demand of the buyers, and it was quite a decent increase from 130 billion on the left scale, basically on the right scale, all the way into the 170 billion. So quite a significant increase, but then another failure pattern, right, with the rounded failure, which was definitely more aggressive in the DeFi sector, right, in the DeFi industry field, rather than the mainstream altcoins and Bitcoin itself, right? So this lack of follow through tells me about this local underlying weakness in all the markets, and naturally, whenever Bitcoin is weak or questionable in terms of its momentum and relative strength, this brings this overall, I should say, aversion towards other crypto assets, which is altcoins, which is DeFi, which is NFTs to some other extent as well, right? And as you can tell, there's also lack of follow through to the upside on the RSI scale, on the bottom indicator on the RSI side, right? So this tells you that so far, the way I read it, that there was a more excursion to the upside In DeFi, which Feder reacted a little bit more volatile, to the downside, with more volatility, with more retracement, more risk on the sell-off side, when compared with Bitcoin and when compared with altcoins as a whole, right? Overall, after quite a heavy decrease, after peaking in basically November 2021, right? We have not seen really such a strong follow through to the upside. Instead, a lot of oscillations, fluctuations, a lot of noise that is not necessarily the most supportive case to be fully exposed with the extreme alt season expectations just yet. And in all honesty, I'd never given up on my hopes, thoughts, thesis for Bitcoin reaching $100,000 or higher, Ethereum reaching $10,000 higher, Litecoin reaching $1,000 or higher, ultimate alt season, and so on and so forth. Of course, it did not assume or predict or include the expectations of war, because I was definitely not expecting any war to happen. I wasn't expecting, so much of inflation soar with the rate hikes also on the horizon, and overall terrible opening of 2022, which sets the ground. And I think the overall vibe for 2022 was more flat kind of like performance, or even negative in terms of the bear markets ahead, right? So I still think we are yet to peak on the Bitcoin side. Perhaps it aligns with overall, little bit of a fresh air and relief when equities get such with a follow through to the upside. But before we actually get that, I don't think it's the wisest choice to actually go and expose yourself to risk by any means right now. All that things also discussed on a daily basis in our premium trade group, which is basically existing since 2017 against 99.9% of other communities similar to that, basically, which either exit scammed or they vaporized, to just simply evaporated out of the market, just disappear, right? Got wrecked or something. So here instead, we get you 7 days free. And if you guys want to get the educational trading materials, for any markets, traditional markets, crypto, forex, commodities, indices, stocks, whatever you want, with 24/7 support, with the new talented team members of mine, with daily webinars, automated signals, and more. Just go on to thebirbness.com, press on the upper right corner, sign up free button, get your email, get your name, and it's going to automatically set you up in minutes. And I see you guys with all your questions that you want to ask in the Discord. It's 7 days free, no charges to it. And that's all, folks, for today's quick webinar update. Hope you guys are staying safe. Make sure you hug your loved ones. This is very important to spend quality family time throughout the Easter. And once again, may Jesus bless you all, especially after the resurrection on Sunday. That's all. I'm a strong believer of Jesus. I'm a strong believer of overall, I think, standing for something bigger than ourselves. So if you guys enjoyed this webinar, make sure you also stay tuned for the next episodes, for the next podcast releases coming up tomorrow, and on every other thing coming out from our YouTube. If you are new, make sure to subscribe, hit a thumbs up, hit the notifications bells, and leave some questions in the comments that I do my best to go through once the show is over. Hope you guys enjoy that. God bless you all. Stay safe, and I see you around.